This is the briefing for Friday, April 28th. Well, this has been quite a rotational week in the stock indices. Now, there's some conflicting information. I want to go through it and just kind of clear things up a little bit. So basically, this is the spiders, and you can see the rotational pattern that we've been in for quite a long time period. Then, of course, we get this rotational area right at the upper extreme going all the way back into February, and then we came down, tested the 380 support level, and then, of course, we have another rotation at the upper extreme, which appears that it wants to break out. Now, you can see right here we had a breakout, and then, of course, it led to another rotation lower. In this week, I had anticipated that we were going to see some type of a breakout to the downside, mainly because you can see that on Tuesday night, we were testing the lower extreme. And on Tuesday's briefing, I suggested to watch carefully for a potential divergence in market breadth opening on Wednesday. And that's exactly what we got. If you can look down at breadth right here, you can see that we had a slightly lower low below Tuesday's low. And then, of course, we had a stronger breadth reading than we did, which led to some type of rotation up, or at least I said it would lead to some type of rotation up or a pause. We are also at a point of being overbought as well. Now, this certainly turned out to be more of a move over the last 2 days than certainly I expected. But we have to understand that we had an attempted breakout here on Wednesday, and then now we have an attempted breakout on Friday to the upside of this area of balance. Now, it's important to note, and I've covered this in previous briefings, that when you reach an extreme like this, it is consistent with traders stepping back, trying to determine whether there is enough strength in the indices or in the market or in the financial instrument to drive price higher in this case. So you get a typical pause around a key reference area like this. It's not 100% of the time, but sometimes they'll just shoot right through, but that's typically around a news event. So we've got this pause here. So it's going to be very important to see what happens on Monday's trading. Now, we do have a pretty significant news event next week. I believe it's on Wednesday that the Fed will announce whether they're going to increase interest rates again. So that certainly is going to have an impact on trading. And as typical prior to news events, we may see just a pause and just some rotational trading within potentially today's range until we get that news event on Wednesday. Now, what was most interesting in this move to the downside, now I'm using the spiders as an example, but you can see volume was beginning to increase, and volume is the fuel that drives a trend. So without volume coming in, the trend is weak and potentially weakening. We also have, as you can see from Wednesday's trading on up through today's trading, you can see that volume in the spiders was beginning to fall off slightly. 52-week highs minus 52-week lows was improving over the last part of this week, Wednesday through Friday. And you can see breadth improved also, but you can see we have a slight divergence in market breadth between yesterday's high and today's high. So look, there's some mixed information here from the indices that we should see a resolve to on Friday. Now, this is the NASDAQ or the Qs. You can see the rotational pattern here. You can see the attempted breakout. This actually occurred on Tuesday. And then, of course, we have a breakout in today's trading. I should point out that the indices closed near their highs today. That suggests that they potentially would go higher on Monday based on the fact that they would have continued higher if the market had not closed in today's trading. Intermarket divergence between the S&Ps, the NASDAQ, and the Russell. And you can see the Russell was testing the lower extreme here of this area of rotation and just bouncing off of it. So the Russell is certainly lagging this. Next upside resistance for the Russell is the 178 to 180 area. And you can see volume began to increase in the Russell just on this move higher. Did not increase much on the move to the downside. So basically, the indices are at a point right now where either they're going to break out next week, and we're going to see a breakout in multiple time frames, not just this time frame, but potentially this time frame as well, which could be a significant move and a significant move higher to the upside. The same thing with the NASDAQ, a little bit different rotational pattern, but you can see that this area here, we're breaking out or broke out today. Whether it can be sustained or not is going to be important. You can see volume on the Qs was increasing as we moved through the week, and this moved higher. So certainly the NASDAQ appears to have the fuel coming into it to continue this move higher. In terms of overbought and oversold, we are overbought in the NYSE, not so much in the NASDAQ. But this does not preclude the indices from going higher next week. But I do want to keep in mind that there is a pretty significant news event next week with the Fed announcement. Now, looking at total volume, this is very interesting. You see total volume in the NYSE. This is the rotation that we've been looking at in the other charts. And you can look at what's happening with volume right through here. It just really fell off. Now, we did get a slight tick up in total volume as this move to the downside started, but from Wednesday through today's trading, look what's happening with total volume in the NYSE. So this is giving me somewhat of an indication that unless there was a news event, unless there was not a news event, I should say, that we potentially would see a continuation of a breakout and much higher prices. But that news event can certainly change the perception of value, because certainly going into the close today, traders want to drive this market higher. And then, of course, look what happened with total NASDAQ volume. So you can see the rotational pattern it's been in. Volume has been coming in even though price has not been moving. Then we got this move to the downside. Volume stayed about the same. And then, of course, Wednesday, Thursday, and Friday, you can see total volume really taking off in the NASDAQ. So based on this, if we did not have a news announcement next week, I would suggest that the higher probability is we're headed higher. And we still may be headed higher, but it's just an unknown how the market will react to how much, if anything, the Fed announces interest rate increases next week. So basically, we have to lean towards the long side of the market the first part of the week, but with a little bit of caution. And certainly the most important thing that, and I've been trying to say this throughout the briefings, is that volume is key. So breaking out and continuing the breakout move here in each of the three indices I cover must be accompanied with volume. Total volume seems to be coming in. Volume on the ETFs themselves not coming in except for the Qs. So it's just kind of a mixed bag that we have going into Monday's trading. Should be a very, very important week next week. Have a great weekend, and I'll pick this back up for subscribers on Monday.